I'm 680 News senior business editor Mike Epple. Quite the start to the year on the markets. They're done for January on Bay Street and Wall Street, and it has been one of the best starts to a new year in decades. The TSX picked up 8% for the month as investors bought in right pretty much from the first day of the year and haven't seen much selling at all this month. Stocks that have been in favor have been found in the banking sector, the energy stocks. Gold shares have been on fire recently with the precious metal at an 8-month high. And those cannabis companies, top performer, Canopy Growth, up 70% so far for 2019. Wall Street's had some big gains with the Dow up 7% and the tech stocks stateside, led by Apple and Intel and others. The Nasdaq up by 9%. Now, the oil market has been a contributor to the gains on Bay Street, with the price for oil up 21% for the month. That's the best January in 36 years, as the market has basically been rebalancing following production cutbacks by OPEC. And in Alberta, which announced early this month that they were cutting back the quotas for Alberta oil production. Now, things have improved so much for Western Canadian Select, now north of $45 per barrel U.S. The Alberta government has said that they're going to start pulling back on some of those previously announced cutback plans. Well, despite public outrage last year regarding the data breaches and privacy issues at Facebook and people saying that they were going to cut back on their activities on social media, the latest earnings at Facebook do not indicate that that is indeed the case. In fact, Facebook saw more subscribers globally in the fourth quarter and more revenue generated per subscriber. Net result for Facebook, a record-breaking year and end to 2018. A $6.5 billion profit in the fourth quarter alone, with sales surging by pretty much every metric for this company, which also operates WhatsApp and Instagram. And Facebook's invention of the My Story feature has been a big winner, and they're going to continue to build on that. Investors applauded or gave it a thumbs up today, a like, shall we say. The shares of Facebook up 13% in U.S. trading activity. Tesla reported a quarterly profit. The electric car company made money for the second quarter in a row. Its revenue is a little bit flat. The big issue right now is not the demand for Tesla vehicles. And Elon Musk explains that consumers want to buy the cars. Might just be about the price point.
The demand for Model 3 is insanely high. The inhibitor is affordability. It's just like people literally don't have the money to buy the car. It's got nothing to do with desire. They just don't have enough money in their bank account. If the car can be made more affordable, the demand is extraordinary.
And Musk says they're still ramping up production of the Model 3. The break-even point is expected to be around 2022 when electric vehicles come down to the same price point as natural gas-powered vehicles. And another sign today that the Bank of Canada is likely on the sidelines for moving on interest rates anytime soon. Stats Canada reported for November the economy shrank in the fourth quarter of last year. We saw that massive sell-off in the energy trade. That was certainly a contributor, but consumers weren't spending as much. So it was 2 out of 3 negative performances by the economy in the later stages of 2018, a loss of momentum coming into 2019. Interestingly, the Canadian dollar recently has been back up to about 76 cents U.S. From the 680 newsroom, I'm Mike Epple for City News.